Well, hello, folks. I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves what happened today, and what does it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, and broadcast at 10 o'clock Eastern Time, archived on YouTube. It's under the channel LA Little. You can find it there. You can watch it anytime, anywhere, on any device. Up to you. As far as what happened today, let's pop in here because we actually had some selling finally on these indexes. Composite down 1%. The Russell was down 1.2%. An NDX almost 1%. The Dow, the S&P, basically flat. They didn't go anywhere. Everything else got sold off. And if you notice, that's tech and small cap, which is interesting and which we'll talk about here in a bit at the bottom of the show. As far as the rest of the market, kind of a flip around of what we've seen. We see green here, red there, right? So red on the equities, green on the commodities, and that's exactly the opposite of what we've seen recently. The dollar was flat, and so you kind of had a flip around today. The opposite situation taking place. Let's look at the indexes and see what they look like as far as what they're doing. Now we've kind of been watching this slow roll taking place here. You know, you had the big push up, right, and then it kind of leveled out, and now it's kind of rolling over. Coming back in, it's already broken underneath this swing point high. It's testing into the second of the two now. And so it's into that little zone right there, right? But as you can see, it really doesn't want to give it up. Every time down, it just, barely gets under and goes back up. Today, it actually did an under over. Could get a little bounce tomorrow as a result of it. The Dow Jones looks about the same. Really not much change there. Same sort of a roll, except for today, it didn't even go under the previous low. And then we go to what used to be strongest, now weakest, and the reason for that, of course, is it broke that range. And we were talking about that range, and we were saying, hey, if it breaks the range, that's going to be something different. And if in fact it does it, which it did, that's going to get it down into these lower areas, right, and do some testing. What are those lower areas? Well, that's a retest, regenerate zone there that it's going to come back into. It's much more than 6 bars here in terms of the the distance. So from there across, much more than 6 bars. So when you have that kind of a situation, right, where you're greater than 6 bars, then that usually ends up being the case where it's going to get bought. It's going to get bought as it comes back in to do the retest and attempt to regenerate back to the upside. And so that's the idea. It got about halfway there today. I suspect by the time we're going to get to the Fed meeting, or as a result maybe of that Fed meeting, then we'll see that retest, regenerate take place. Probabilities are fairly high on that sort of a scenario. So, that's something you want to watch, and that's something probably at this point you probably should expect. That's the NASDAQ composite, the broad composite. The NDX is doing the same thing. Now the NDX, a little bit different in that, yeah, it was a range. It broke down underneath the range. But the breadth of that move, it's almost over already, right? It's almost done it. So the NDX being the stronger of the two, almost done. It looks like it may overrun that a little bit if it wants to get back and do the retest, regenerate. It's the same situation, but it may not even get back there this time around. So the point of the story here is that, yeah, we finally got the break. Yeah, we finally got the move down, but it might not be that much more to go. And if you look at the Russell, that is kind of what the Russell's saying, because remember we were talking about an ABCD structure of the downside. That ABCD structure just finished off today, and so we're pretty much done, and we're coming into this area. Now, if the NASDAQ, the NDX make a run to that lower area, you would expect the Russell to try to get into this bar. That's the top of the high volume bar, which happened on the way down. That would be the place for it. So we may see this run down, instead of stopping here, run down deeper as a result of pressure from the other indexes. but I think the Russell has done mostly what it wanted to do. And when you're looking at the Russell and you go back over and you look at the S&P 500 and you ask, okay, where can this get? Well, we kind of talked before that this range, if it broke, right, would take us back into the top of this bar. That still looks to be where it wants to go. But right now, you know, it took a break today while the technology stocks took their hit finally. So that's the indexes. If we look at the world markets, really not much of a difference there. Those guys are doing about the same as they were. And what I mean by that is the strong are strong. The strong now were the weak before. The strong before are weak now. And so like Australia, big hit, big push down. You know, Brazil, same sort of scenario. If you go over to Asia, you know, the China H shares breaking swing point lows here, just broke tonight. You can see the indicator here, it's underneath the lows. That's trying to break multiple swing point lows. If it does it, that would be ugly. Although it would be on one time frame, it definitely would be a change of character. Here's another break taking place. This one on the Hang Seng itself, also multiple swing point lows. It's trying to break. Remember, these were the strongest. Now they're the weakest. It's just as if they've rotated their money somewhere else. So what we saw happening there is still happening. A little doji here on the Taipei, and when we get to the sectors, you'll see that that kind of feeds into what the sectors look like. So let's pop over and use that as a segue into the sectors, and let's go straight to the SOX. The SOX had an ABCD structure on the way down as well. We talked about it. It was a small one. It finished off today as well. So we've got ABCD structures to the downside finishing off. We also have, interestingly enough, the XLE we were talking about. It was deep enough to where it's probably going to try to get a bounce. Well, it gets under today, back over. This is after an extended move. This could get a 2-bar reversal, pop back up into, do a retest, regenerate off the prior low. So that would be looking at this area here. Let me see, we had a low, it'd be right in here, right? That's sort of an area. So that's, you know, and it's coming back within 6 bars, so it can make it to the top of that area. And that would be a little big congestion zone up there when you consider these bars. And so from all of that perspective, I think the energy is actually going to finally get its bounce here. If we look elsewhere, you've still got strength in the sectors that had strength. XLF just hanging at the highs. XLI doing the same. XLK didn't even break down the range, right? It's still holding on to the range. That's mostly because of Apple being a big weighting in that one. XLV, XLY actually is doing a retest, regen still. XLV coming off. And talking about XLV, and we'll talk about the IBB a little bit later, but the IBB actually is trying to come off as well. Let's pop in the IBB here. And where is the IBB? Got the wrong symbols. Here we go. So, yeah, a little bit less volume. So now this will be interesting because there's a question about a couple biotechs tonight. And so we'll be looking at those. But one of the things you always want to do is if you're thinking about buying into something like, say, a biotech, you want to ask yourself, okay, where is the sector, right? What's the sector doing? In this case, the sector went under a low, back over it. Not really a hammer, but back over it. A little less volume. This is probably going to try to get a little bounce tomorrow. And so that should get a bounce back in most of those sectors. Excuse me, those stocks in that sector. So if we try to wrap it up here, you know, and look at it from a perspective of, you know, a 10-minute wrap, NDX composite, they're heading back for the retest, regenerates. The dollar stopped going down. The rates kind of flipped around. I didn't look at the rates or look at gold or any of those, but we saw it on the opening there. The commodities held. So you've gone so far so fast on rates and in dollar strength that now you're just getting a reflexive type bounce in those things that have been getting hammered. And we're actually going to talk about those in a few minutes because we've got some viewer questions on those as well. World markets, they flipped around. and still doing the same thing. So that's nothing different there. The sectors, about the same, actually a little bit stronger than they were as of last night. So when you put it all together, you know, it looks to me like you're probably going to just kind of drift sideways tomorrow in front of the Fed. I don't think you're going to see a big move either way. I actually didn't expect a big move today, but when we got that range break on the NDX and the NASDAQ, that gave us a decent sized move, you know, a 1% move. But the interest rates and the Fed, that's what's happening. That's where, you know, that's where all the focus is going to be tomorrow as the Fed starts talking, and Wednesday when the announcement comes out, and then Yellen has her press conference afterwards. And that's, I suspect, where we're probably going to see, you know, the way it's set up now is this market does want to come back and do a retest regen, but we actually have strength most everywhere else. And so when you look at it from that perspective, yeah, we could get that retest regen, but it doesn't have to come right away. I mean, it could just, you know, slowly come down there versus coming down all at once. If you're bullish, you'd like to see it just hammer on down there and get it over with, right? Come down fast, have no volume, and then flip around, you know, go back the other way. That's kind of the way this thing has worked before, bringing back up the IXIC. So if you're coming down here, you'd like to see it just come straight on down there, two big fast bars down into the Fed, right? That would be the best case. I don't know that it's going to give us that though. We'll see, but it doesn't look like that's what it's going to give us. It looks to me like it's going to meander, and that's actually a little bit worse because you may get a little bounce here, especially if you get a two-day bounce going. So let me draw out the scenario. So if you have a situation where tomorrow it's inside day, and then in front of the Fed you get a bounce up higher, and if I can draw this in, you get a bounce up higher, maybe up into, say, that level, and then the Fed drops it. Right now, what do you have? You have an ABCD structure, right, on the way down that can get it into that area. So that may be the way this thing sets up. You know, it's kind of set up that way. It looks like tomorrow's going to try to bounce. Okay, that's the wrap. Let's look at some viewer questions, and then let's take a look at the interest rates in the Fed and what's happening there. So questions from viewers, I'll take them in order. I had one that came in on Sunday which didn't make it into the show, came in a little bit late, and as you can see on the side here, if you pop into the TATV, you know, you need to get them. There's ways to contact us here, and you need to get them in by 6 p.m. Eastern time in order to get it on that night's show. So, you know, I'd love to have you interact, and we got some great questions tonight. I think it makes the show much better when you're asking me what you want to hear about versus what I think you want to hear about. So let's pop over and let's look at these. So let me get up the email here. And so the first question had to do with REITs and interest rates. So let's go into that first. So the question is, as interest rates have started to move, not sure if this continues after the Fed, but it has hit the REITs pretty hard, and yes, indeed, it has. Do you think this is an opportunity to buy them, or will they continue to farther down? Anything that is interest rate sensitive, REITs, utilities, bonds, you know, any kind of the bonds, the junk, the municipals, whatever, they're the ones that got hit, and we've been talking about that the last few days. You know, another sector that I didn't talk about that's been hammered pretty good is the REITs. And here's the IYR, which is U.S. real estate. If you remember, this stock had made quite a move to the upside. Here's the weekly. Quite a move to the upside, and now it's coming down. It's coming down with some decent volume on the way down. Swing point low here, big volume support bar here. Highs, and I'm on the weekly, highs here and here. These have not been retested. These are not retest yet. That means that they're open for a retest, regenerate. So the first thing you have to realize is on that weekly time frame, you got a swing point low here. You came into it with volume. I suspect they are going to get a bounce when we go back and look at the daily. but I don't think they're done yet. I think they're going to come on down, and they're going to come down into this bar, the April 14th bar, and they're going to trade into that guy, which is at 69. So let's pop back over now to the daily, and you can see why the bounce looks like it's going to set up, because today you went under, over, extended move down, big, fast, wide price spread, extended move down. This thing's going to bounce tomorrow, right? And off that bounce, it's going to set up probably another leg lower. Now, how high can it bounce? You know, your guess is as good as mine. I mean, I don't see anything here to stop it really on a bounce, other than the fact that it has broken a swing point low and will be doing a retest, regenerate off of that. So that would be the target right up there. That price point is 71.78, and if I look over here, that's the bottom of this, so right in that area probably is the bounce potential. But given how hard fast it came and the way it bounced today, that's a good target. It could make it all the way back up to here, which is 72.45. So yeah, I think it will get a bounce, but no, I don't think it's done yet, not quite. You know, it appears to me that it is going to try and push down lower before it's over. Can you nibble here just in case? Well, sure you can. You always can. You just nibble lightly. Don't take a big chunk at this area, because my guess is it is going to flip around and come back down again. If I'm wrong, and if that was it, and if the retest regenerate doesn't happen, then you'll be glad you bought some here. But again, charts are set up. The hard thing here, and the reason I hedge when I say this, is so many times to the downside, you get these situations to where it should do something, but it never does. And that's the only reason I keep pointing that out, is because so many times we've been disappointed trying to get a better price, quote unquote, and the market simply doesn't give it to you. It does appear we'll get it, but then again, it's done that before and hasn't given us those setups, continuation setups that you would expect. What's the percentage decline here? So we had a half. This is about 2. That's about 5. So we had about a 6% correction already. Yeah, it's not a bad place to take a nibble, probably. Just assume you're going to take more, though. If you buy it here, you have to be willing to take more on. And here's a couple others. Here's the IREIT, the real Investors Real Estate Trust, just totally demolished. And I had another one I was looking at just in preparation, the Real Estate 50, the iShares, also same sort of a scenario, same sort of a situation, a lot thinner though on this one, so it's kind of hard to read. But that's what the REITs look like. That's what the interest rate question looks like to me. Let's go to the next one, which has to do with biotechs. And on the biotechs, the question is, these guys have come down a long way, and the fact that they've come down a long way, are they time to buy? And the viewer has two in mind. The first thing I wanted to point out is that you've come down, gone under, back over, right? You're coming into some big bars here. You don't have the volume. This does look like it's ready to bounce. So that's the first notation that we should make. If I look at it on a weekly, it's really nothing here in terms of the decline at this point. So that's those two things. Now let's go look at the two stocks he's interested in. Gilead Sciences. Now Gilead had gotten a big, fast, hard move down with high volume. Anytime I see those, if I see the stock come back into this bar, in other words, it can't really get out of this bar very far and comes back into the bar, and especially if it gets deep into it, that says to me it's more than likely going to test that low, which is exactly what you want it to do. So if you're asking me where is the buy is a test of that low, and you're almost there. So a test of that low, less volume, which is probably likely, is the buy on Gilead. So that's set up. If the IBB bounces tomorrow, though, which it looks like it will, you won't get that setup probably tomorrow. This one probably, unless the bounce is weak and this is the weak sister in it that won't lift. It doesn't look like you're going to get the test yet. The other one was Celgene, Let's look at Celgene. So Celgene comes back pretty hard as well. This had a breakout off this swing point high, had not retested and regenerated. It is doing the retest regenerate now, and I suspect that's why the viewer is asking. Does a full retest regenerate after more than 6 bars, which is not the normal case, and it does it on some decent volume as it comes back in. 4.9 coming back into 4.3. The breakout though had 5.3, so you get under it. You don't have as much as the breakout bar. This looks like a buy at this price point. So that's the two. I would probably say yes on this, and I'd try to let Gilead take and do that full test that we were talking about of that high volume low. That would be the ideal case. Last question comes from another viewer asking about CRM, which is the Salesforce.com, which is a management system used by many of the big corporations. I'm on the daily to start with, and on the daily time frame here, gets underneath it. Low is 57.77, gets under it and closes at 57.57. Now the viewer tells me he bought some at 59. He's thinking about buying some more. The thing I would say is that, okay, if you bought some at 59, if you bought as much as you wanted to buy at that price point, I wouldn't buy more at that same price point. In other words, I want a cheaper price point so that my average, and this is just a money management technique, so that my average is better, not worse. So if I could have picked it up at 57, maybe it makes sense. Or if it actually comes back and tests into this high, which is 56.5, then that would be a more ideal place. Right now, the retrace looks good. It looks like not a bad place to be thinking about this guy. All these high flyers got hit today. Salesforce just happens to be one that a viewer's asking about, but they're all doing the same thing. They're all coming to their breakout areas, their gap up breakouts, and there's a bunch of them, and all of them are doing the same thing. They're coming back, they're testing, they don't have the volume, they look like they're going to flip around. Okay, so that's it from the viewer questions. Thanks a lot for those. If you want to participate, please send me an email. Tell me what you're trying to do. I'll do my best to answer questions and to help you. Let's move on to the last thought here, and that has to do with interest rates. And I want to pop back over to the OX markets. And what I want to talk about as kind of a wrap up tonight is the idea that, as this dollar has been strong, and we've seen that, the last couple of weeks now, well, actually about 4 weeks, it really made its move. That dollar has pushed up, and it's just hanging up here. We have a decision coming out of the Fed. Clearly, given the way this has traded, clearly the expectation is that we're going to see the Fed start to tighten and bring rates up, right? Tighten in the sense that, the QE is almost over, and they're going to announce that that's going to be over in October. But they're going to bring forward, excuse me, at least that's what these charts are telling us. They're going to bring forward the ideal of when the rates are going to start to rise. Now, anytime rates rise, there used to be an old saying, and I don't remember exactly what it was, but it was something to the effect that, when the Fed raises 3 times, basically, the markets, that's when the market's going to really stumble. It's not the first one or the second one, but the third one. And coming from these low levels, that's going to be extremely true. So I would caution you that, yeah, we're probably going to see some selling if, in fact, that's what happens and the Fed tells us on Wednesday they're bringing it forward. But if they bring it no farther forward than, the late spring, early summer, which is what I expect we'll hear if, in fact, that's what we're going to see, then I don't think that's going to make a big difference. Will it make a difference to the market? Yeah, I think the dollar will spike again. I think all those commodities and everything will get hit again. And I think the equity markets could take a little pressure as a result of that. But I don't think it's going to matter that much yet, right? That's not going to be the one that matters. What's going to matter is when we get on down the road and all of a sudden maybe inflation starts to take off, or maybe the numbers start to be extremely strong on the economy, and then they start really jacking up the rates in a faster manner and in a larger manner. Instead of, 1/4%, you start seeing 0.5% or something, right? That's at the point where the market will take notice and you'll get a heavier sell-off. Going back to the markets and trying to look at this on a little longer time frame, and what I want to do is I want to pull up, I'll pull up the S&P 500, which is a good proxy, and I'm going to put it on, I'm going to go to the monthly chart and look at it. And if I look at it on that time frame, the monthly chart, I mean, there's no, let me pull this over, there's just no, there's no correction that's taking place. So when we finally do get a correction, even though it's quote unquote, when I say it doesn't matter, it could be 10-15%. What I'm saying is that we haven't had a correction for 3 years. And when you go that long and you go this far, you could get a pretty decent sized correction as a result. So, you have to take it in the context of we've gone a long way and we can pull back on some of the fear, but it's not going to break this market. It's simply going to put it into, some sort of a shorter term, and what I mean by shorter term is duration-wise correction. Yeah, it could be sharp. It could be 7, 10, 9, 8, 15. But is it going to crash the market? No, it's not going to crash the market the first time around. It's not going to do it the second time around. It's not going to do it with QE coming out of Europe and then coming out of Japan and coming out, out of China still and everywhere else. It's just not going to happen yet. Can we get a correction? Sure we can. Is it going to crash? No, it's not going to crash yet. There's no signs of it crashing. We're going to have to get some breaks and multiple swing points on multiple time frames before we can even talk about that kind of stuff. Okay, so realize we can get a push down, we can get a decent sized correction. More than likely, you want to size that baby up and buy it, not sell it. So that's what I want to close on tonight. Folks, I hope you had a great day. I hope this show helps. And as always, I thank you for joining me. Have yourself a great one. Take care. Send those emails in or text me, and I'll take your questions and make a more lively show for us. Have a great one. Thanks a lot. Take care.